The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everyone. This is Jacob Shoup back from the long break. I hope you all had a wonderful 4th of July weekend. It's always a treat having Steve on at the 8 o'clock hour. It's just a really nice way, I think, to slide back into a full day of trading. Anyways, let's take a look here. All right. We have the Q's down slightly. All of our major indices and kind of the derivatives from that are down slightly. Steel Dynamics down about 2% at 108. Still settling above. Let's take a look here. The monthly, 3 months. So we're still above kind of that 100 level that I've been looking at. Again, we tested it with some volume and still sticking up there with some light volume, of course. NVIDIA at 420, absolutely insane movement still. Obviously our high here was 439.90, but it still loves being right in this area. In June, obviously we were testing that 400 to see if the stock liked it above that point. It did. And we're cruising kind of just in this consolidation point right now. Microsoft down slightly. We have the ES Mini down, again, 0.52. NQ down 0.54. The Russell down 0.75. We have the gold contract up slightly. And, of course, Oracle, another big one for AI, is down slightly as well. So we'll see what happens at the 9:30 time when the market opens here. One of the things I was speaking about last time we were on was about fraud in the economy and how that was driving some of the inflation woes that we've been experiencing. This was a super interesting article. We'll take it chill right now and look at this here. This is enormously costly, quote, business loan fraud drove inflation in home prices in certain markets. So it's been a tough market, obviously, for U.S. home buyers. Another factor may have contributed to rising home costs in certain markets, and that was fraudulent claims from the COVID-era Paycheck Protection Program, or PPP loan. According to new research, the PPP loans were designed to help cover business expenses during the pandemic. Of course, this was employee payroll and kind of other operational things. Fraud on this scale is enormously costly. A historic pandemic-era relief program, PPP, distributed more than $793 billion between April 2020 and May 2021. Previous research from the University of Texas at Austin team flagged $117 billion of the funds as, quote, suspicious lending. The fraud was highly concentrated geographically, and because of that, the concentration, there may have been spillover effects in some of those local areas. U.S. home prices rose by 24% between 2019 and 2021 in November, according to the Federal Reserve Bank of San Francisco. However, government aid may have also contributed to that growth, including higher rates of fraudulent PPP loans. Okay, so, there's this as well, right? I think one of the other things that was interesting and might have driven costs up in some certain areas, because that's what this article is looking at, right? It's some certain zip codes are specifically targeted by this, kind of fraudulent activity. And one of the other things I think that's not, obviously fraudulent activity, but still injected so much money into the economy was really the COVID era pay for healthcare workers. I had a roommate who is an EMT, and in this area they make about $11.50 an hour, and he was able to get a government contract for something about like $35 an hour working on the border. And for nurses and other people in the healthcare industry, they were making sometimes even up to $80 an hour, especially if they were travel nurses. And this just put so much money into the economy. And I think especially, obviously in places like St. Pete, younger cities, but also areas that had higher concentrations of hospitals just saw massive increases in property value and then also increases in rent. So the COVID era really was quite unprecedented regarding the amount of just liquidity that was injected into the market, but really at so many different levels. Again, looking like with the healthcare workers, and obviously, they were putting themselves on the line for that kind of stuff. So, but it was just so much money. And I think that's going to have a long-term effect. We'll probably see a pullback in housing. I know we've seen a slight pullback in housing, purchase-wise and price-wise, but we'll see if that continues long-term. So going back to this article, it says zip codes with high suspicious lending per capita had home price growth. That was about 5.7% higher than zip codes in the same county with lower levels of fraud. That's really impressive. This effect is large relative to other proposed factors explaining house price growth during the COVID period. The findings were consistent after weighing factors such as land supply, previous home price growth, remote work access, population density, net migration, etc. And I mean, it's pretty amazing that that fraud can affect the market in such a major way. And, I was reading the study that this is pulled from, and there was no real suggestion on how to actually determine whether or not someone that is receiving these kind of loans or government handouts is doing it fraudulently, unless there's some really, really complex case opened up against like the individual. So I don't know. That's I just read that this morning and I thought it was pretty impressive, actually. Speaking on that note, this article here, it's about 52% of Americans believe that America is too expensive to live in. And you have this issue where the cities, and this is probably an issue as old as time, but there are some ways that the society measured against it. But, cities are just becoming so expensive, but that's where all the jobs are, right? And so, yeah, of course, you can kind of commute into the city, but as the surrounding areas grow as well, as the city grows, you just keep getting further and further out until you find an area that is affordable to live in. So by here, in whatever spare time, let's see here, everything costs so much. This is what one of the people they're interviewing says. Everything costs so much. Food is high. Gas is high. It's really hard. This is a 40-year-old from Arizona working 14 hours a day. And, obviously it's not extremely common, but I know more and more people who are getting these side hustles and working in long periods of time in order to make ends meet. As Americans look ahead to another Independence Day, and likely a contentious 2024 presidential election, many are feeling fiscal pain as the prices of food, shelter, healthcare, and transportation climb higher. 52% of Americans participating in this survey, which is Suffolk Poll and USA Today, said the United States is too expensive to live in. And about 7 in 10 Americans said stifling inflation in the economy are our nation's top problems today. And as we continue to have this tight labor market, the Fed's going to remain pretty strong on that. And it'll be interesting to see if we can actually get any significant pullback. Folks, stay tuned. We have Kevin Hincks coming up in the next segment. And then we have our man Teddy Techstat later in the program. Stay tuned.
Tigers and Tigresses, get ready for our annual 4th of July Tiger Dollar Sale. From now until July 7th, you can receive a 20, 30, or even a 40% bonus when you purchase Tiger Dollars. Tiger Dollars are automatically applied to your account and can be used for all subscriptions and purchases. Don't wait, this sale ends July 7th. Visit TFNN.com today to purchase Tiger Dollars and receive a 20, 30, or even a 40% bonus. As an added bonus, every order comes with a special TFNN mug. Happy 4th, Tigers. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
What is going on, everyone? Over the break, I was looking at this article. You know, there's a lot of talk online with Elon Musk and Mark Zuckerberg, and I know people were talking about it in the den as well. But one of the big things that's happening right now, at least, is Meta is looking to rival Twitter with Threads. And Twitter has had a total meltdown over the past few days. So Musk was refusing, or at least, let's just say Twitter was refusing to pay some of its rent. I guess somehow that had some kind of connection with Google and its cloud services, and they were refusing to pay the rent with cloud services as well. Tesla was. And so this led to essentially Twitter not being able to pull computing power from the cloud. This came in, this corresponded supposedly with this kind of view limit per day, right? So, you know, if you're a usual user on Twitter, you can only view so many tweets per day. The problem was that when people kept trying to call the tweet they're trying to look at and they reached their limit, the JavaScript on the back end of Twitter kept sending an error response, and it basically just kind of went overboard, and Twitter ended up DOSing themselves, essentially, right? So they just overloaded their systems, and it made Twitter not work, which is, you know, that's a pretty gross oversight. Twitter's obviously not public anymore, so, you know, do with that what you want. But it's still really interesting, like, you know, case study, I guess, with what's going on with Twitter, and when new programmers come in and try to, you know, manipulate what's going on with what other people have made. So Meta is releasing an app called Threads. It's already on the App Store. Threads is essentially, this is what the app explanation says, at least. Threads is where communities come together to discuss everything from topics you care about, and it's really going to probably be a Twitter mimic. Instagram users will be able to keep their usernames, right? So this basically ties into the Instagram platform to follow the same accounts on the new app, according to the screenshots displayed on the App Store. Musk says whatever to this. Threads could be the latest headache for Musk, who acquired Twitter last year for $44 billion, and has been making changes that have unnerved advertisers and turned off users, including new daily limits on the number of tweets people can view. I think it's quite interesting because what what we were talking about in the office a while ago as well is all the new things that Musk had been adding to Twitter to try to revolutionize it. And it turns out that it looks a little bit like this is a pet project for him. And he'd been on Twitter for so long, and this is one of those like, well, if I could make this choice, I would, or this change, I would. And that rarely ever goes over well because you kind of lose the essence, right, of what this application was. And I had this feeling that someone else was going to come in and as Twitter evolved away from what it originally was, and it's already been there it's already been moving that way for quite a while before Musk's takeover, but Musk's takeover really expedited this evolution out of what it used to be. And I didn't expect Meta to come in and do this, but I think that's actually quite a smart move. That's positive for the company itself. They kind of had to deposition themselves away from the metaverse and kind of, all their projects surrounding that. And this is a nice new place to put their money, essentially. So we'll see how that pulls out as well. We were talking about the housing issues before we went on break. And this is from the Wall Street Journal. And I mentioned that the home prices actually fell, this year, which was is actually kind of a new thing since 2012. So home prices posted their first year-over-year price decline in 11 years in April, as higher mortgage rates made home purchases more expensive for buyers. The S&P CoreLogic Case-Shiller National Home Price Index, say that 5 times fast, which measures home prices across the nation, fell 0.2% in April, compared with a 0.7% annual growth rate the prior month. And also, you're seeing too, banks aren't lending out as much either. I think we're going to see a big soak up in liquidity in the common kind of economy with student loan payments coming back in. I think also you might see, we are seeing now basically defaulting on credit card loans. And if people start defaulting on these student payments, the impact on credit may be significant. And mortgages that kind of lending out will be shortened a little bit more. And that's obviously kind of a long-term thing. We might see that over the next 6 months to a year, but that might be, a depressive factor on everything going on right now. Compared with the prior month, the index rose 0.5% in April on a seasonally adjusted basis. The third straight monthly increase. Mortgage rates rose rapidly in 2022, causing a major slowdown in home sales as buyers backed away from the market. House buying affordability in April fell to its lowest level since November, according to the Federal Reserve Bank of Atlanta. Prices haven't declined as much as many economists expected. And again, I think for a long, on the year kind of forecast, we will see that catch up. But because the higher mortgage rates made current homeowners reluctant to sell, keeping the supply of homes on the market lower than normal. The average rate for a 30-year fixed mortgage was 6.67% in the week ended June 22, up from 5.81% a year earlier. So kind of fascinating little pivot. I think we're getting into these kind of voodoo times with everything. Again, you have the Fed who is actively saying that there's going to be more interest rate increases. And then Powell said they might be back to back even, right? So, we have a lot of things going on right now. They're going to kind of suck up liquidity for the average person, namely, obviously, interest rates increasing. So you're having some issues with credit card spending and then the student loans resumption, essentially. And so we might see all these kind of factors hit all at once. And, we might get a major contraction or at least a depression in inflation on some metrics. So I thought that was kind of interesting to read into. And we can talk about that a little bit as well with the student borrowers. This is a 3-year reprieve. I mean, really think about that, right? And the level of adjustment, in the lifestyle adjustment, a lot of people are going to have to make regarding this. I don't know how many are going to be able to actually keep up with it. Changes in loan system may complicate repayment efforts. And of course, the Supreme Court ruled that there is an executive branch overstep, essentially, in suggesting that they can go ahead and relieve student debt. Payments and interest accrual on federal student loans have been paused for more than 3 years since the pandemic, prompted by the Trump administration and Congress to freeze them in March 2020. During that time, the Biden administration has sought to completely overhaul how borrowers pay off their debts. And, we might see a retest of this essentially, right? It's going to have to come from the legislative branch, which was a lot of what, the legal perception on the Supreme Court's end was. But, that's now not enough time because people are going to have to start paying again, right? So there have been other changes that could make repayment complicated for borrowers. Millions of student loan holders have graduated from schools or left without a degree since 2020 and have never made a payment or been assigned to a loan servicing company. That's wild. Folks, stay tuned. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Received an email to look at General Electric. They've had a 31% increase year to date. They've just knocked out the rest of the industry. And they just recently received a deal basically to replace hydroelectric rotor pulls in Norway. This stock has done pretty well. Your last day with volume at about the $89 area. Let's see here. $89.74 was on March 9th. Okay. And usually the way I look at things, right, at least for me, is I kind of try to look at them like an organism in some sense, and it's, how much energy has it output, and can it continue to truck along? That was pretty significant volume on March 9th. It doesn't look like it wants to pull back to the last day with volume whatsoever. And compared to the rest of the industry, it's doing pretty well. Its fundamentals, its financials were pretty good too. For me personally, I don't. When a stock moves like this, I always have this sinking feeling like something is going to happen with it, right? And that's so much more of an instinct than it is anything, academic or analysis based. But I've seen it kind of do it in other stocks as well, and I kind of make my decisions based around moves like that after quite a long run up with General Electric. However, the financials of the company are pretty solid, as far as general sentiment is concerned, from some of the indicators that I use, it seems like it's a very decent stock right now. But that's about all I can say on General Electric, especially after just giving it a pretty cursory glance over the break. Anyways, moving on, there are new defense ETFs, which I find actually pretty cool, because I always speak about that quite a bit. There's Van Eck released one for Europe, and give me 1 second to pull it up for you. Oh, come on. I think it's DFNS. No, that's not it. I guess obviously it's on the. I'm not sure why that's not pulling up. Regardless, there is a new one from Han ETF, and that's NATO ticker, which is a bit on the nose. And I want to look a little bit at directions because that is on the American side on it. If we can pull it up. Which I find, and I've not looked at any of these defense ETFs yet, but I feel like that's it's pretty interesting. I can look at the distributions quickly on that. So, yeah, these are some ones that I hold personally as well. We have Raytheon at 20%, Boeing at 17%, Lockheed Martin at 7.8%, General Dynamics at 4.5%, and then Northrop Grumman, and we kind of go all the way down from there for smaller defense companies. Anyways, on the European edge, because there probably is going to be a massive ramp up after this conflict with Russia is over, and this rebuilding kind of occurs essentially. I think we're going to see these defense stocks continue to go up. A lot of the times it looks like it's priced in, especially when we were looking at Lockheed Martin a few months ago, and Raytheon as well. As in, there's not a lot of huge movement on the upside, but it's just staying very constant, a lot of these defense stocks. But when the money flows in after the war, I think we're going to see some of these stocks really shoot up. So this article is 3 months after Van Eck's successful launch of the first European-listed defense exchange-traded fund. Han ETF has launched a lower-cost challenger under the ticker NATO. The Future of Defense UCITS ETF, which debuted on July 4th on the London Stock Exchange in the Deutsche Börse Xetra market, seeks to provide exposure to companies generating revenues from spending on defense and cybersecurity. And really, a few years ago, that would have been unthinkable for Europe. They just weren't posturing themselves that way. But obviously, this conflict, I think, has really kind of put it in the face of a lot of the major players, especially Germany. So we'll kind of see how that moves out. But it's quite interesting to see more and more of these defense ETFs pop in. Again, this one, DFEN, is from our friends over at Direction. I'm going to take a closer look at that one after the show. Going on to this, I think one of the first shows I ever filled in for, I was talking about kind of like the theory behind Bitcoin and how it being pegged or in any way correlated to the rest of the stock market kind of defeated the purpose of having this new kind of economy on the under end. However, this on CoinDesk from a analysis firm, Block Scholes, which is funny, said that it's no longer correlated. And in my opinion, if you're big into crypto and but also from a philosophical perspective and not just, hey, it goes green however, many percent or however many times, this is actually really interesting. So this is the 90-day rolling correlation between Bitcoin and NASDAQ. S&P 500 is now at the lowest levels observed since July 2021. Bitcoin's fortune is no longer tied to the sentiment in the U.S. stock markets. But again, this was kind of the idea behind these crypto pirates in the beginning. Having it pegged to the rest of the market, does not a new market make in any capacity. So it's nice to see this kind of move off. And now it's actually doing the thing that a lot of people wanted it to do, again, which was run by itself. The 90-day rolling correlation of changes in Bitcoin's spot price to changes in Wall Street's tech-heavy equity index, NASDAQ, and the S&P 500 have declined to near zero. That's the lowest in 2 years, according to Block-Scholes. If the correlation is now at the lowest level observed since July 2021, when Bitcoin was between its peaks in April and November, excuse me, I said it. The falling correlation has happened on both assets, as both assets have retraced losses sustained throughout last year's tightening cycle. The dwindling correlation with traditional risk assets means that crypto traders focusing solely on traditional market sentiment and macroeconomic developments may face disappointment. The recent spot Bitcoin, and this is interesting as well, BlackRock filed, I think on June 15th, and then obviously you have Wisdom Trees and VanEck and Vesco. And others have brought optimism to the crypto market since, there you go, on June 15th. Bitcoin has produced a return of 25%, ignoring the range-bound activity in the U.S. stock indices. The ETF narrative can be broken down into three parts: front-running the launch, flow, post-to-spot ETFs go live, and validation of crypto as an asset class. Investment product flow is coming, in coming months could be a litmus test for the latter. So I'll be watching closely, and that is Salat, which is the co-head of digital assets at Merrick Solutions. Globally, Bitcoin ETPs experienced inflows of 13,822 Bitcoin in June, with the inflows kicking in after the BlackRock announcement on June 15th. So, we're now seeing a real kind of evolution in crypto right now. And we'll see how that plays out and if it can, basically sustain itself as its own kind of separate market. Folks, stay tuned. We'll be right back. I believe we have Teddy Keckstack up next.
Tigers and Tigresses, get ready for our annual 4th of July Tiger Dollar Sale. From now until July 7th, you can receive a 20, 30, or even a 40% bonus when you purchase Tiger Dollars. Tiger Dollars are automatically applied to your account and can be used for all subscriptions and purchases. Don't wait, this sale ends July 7th. Visit TFNN.com today to purchase Tiger Dollars and receive a 20, 30, or even a 40% bonus. As an added bonus, every order comes with a special TFNN mug. Happy 4th, Tigers. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. I want you to take a look over here. This is the Tiger Forex Report by Teddy Keckstadt. Now, every Monday, unless we have off, this is getting uploaded. And this is a seriously informative newsletter. It is chock full of information, and Teddy spares no detail on it. He talks about the central banks, the FX pair divergence, shifting trade zones, which currency pairs to watch, and freestyle chat with subscriber questions regarding the markets. He also has a webinar archive, which I recommend, and that was from April 19th. Teddy, are you with us? Can you hear me?
I can hear you clearly, Jacob.
How you doing, Teddy?
Oh, I'm doing great. It was a nice, relaxing holiday weekend.
I bet it was. It was for me as well. So, Teddy, what are we looking at today?
Well, we have holiday markets. We've been kind of flatlined, obviously, coming into today's trading. So I think some of the markets to really look at right now is the yen, which is having a nice little pullback off of the highs that were set last week. I think it's a good opportunity for traders to start to look to buy back into this rally. I know you have a lot of gold traders that are watching the yen, and I think that's a bull that you're going to have to really respect for quite some time yet.
Yeah, absolutely, absolutely. Now, Teddy, I don't know if you look at this at all, but I was wondering if you could give me even some kind of cursory insight. I've been pretty focused on what's going on with the Turkish lira right now.
Okay.
And kind of they're, basically trying to get out of the extreme hyperinflation that they've had, and kind of seeing how Turkey plays out on the broad kind of global scale. What kind of insights can you provide on that?
Well, obviously that's in a major bull trend. I actually just popped it back up. I mean, with just the kind of growth that we've seen in this market in the past few months is it's insane. Is what it is. So now, one thing about the Turkish lira that I definitely want your listeners to know is that if you're going to even look at this currency, you got to have deep pockets. So the spread on this trade is very, very wide. And also the moves are very extreme, especially right now. The trend, obviously, it has to do with something that's been building for the past few years in Turkey. You can't just look at the past couple of months and look at how this currency has moved so radically. This is a trade that's been building and building and building, where it's had some very severe corrections to the downside. But overall, it's a very major bull. And a lot of it has to do with the fact that because of the the spread getting in and out, the liquidity factor for this currency is not as strong as many other major currencies. And not that the Turkish lira isn't a big currency, which it is, but there is that much of a difference, especially when you're having moves like that. So as far as if you're looking for direction on it, I'd be very cautious trying to sell into this move. And I think that probably the trend right now, what you're seeing is something that's going to maintain itself for quite some time yet.
Super fascinating. Super fascinating. One other one I want to look at, this was with Argentina, okay?
Okay.
Now, this had more to do with what they had in their reserves as opposed to any particular preference. But this is the first time that Argentina used the renminbi or the yuan to settle part of the IMF debt. Now, obviously, China is having some issues in their economy. And I believe, and correct me if I'm wrong, but the yuan is a little bit weak right now. What are you seeing with that regarding kind of other major currencies in the world?
Okay, well, as far as weakness in the yuan versus other currencies, you have to be very careful when it comes to the yuan and the Hong Kong dollar. The liquidity factor there is not like it is with major currencies. There's also a very price-fixing mechanism, if you will, by the government that's involved with those currencies. So as far as how weak or how strong they are, you can't just look at the fundamentals that are going on respectively in the environment at the moment. You have to look at what is the Chinese government doing as well. I think that let me pull up the chart real quick. I can do this in 1 second. Let's see. Let's pull up the... It just takes me 1 second here to pull this up for you, Jacob.
It really is. It's such an interesting point to make, though, right? I mean, it's such a massive player.
For sure. Absolutely.
It's such a massive player, but a lot of the way that they operate is far different than other major players,
Okay, so I have the yuan pulled up right now, and if you look at it like on a monthly basis, it's coming back near its highs from this is about 6 months ago. Okay, so obviously there's a bull trend here, but the way it's rallying right now, this is a key resistance area. So the question is the overall strength there? Now we all know about the whole BRICS thing. So if the BRICS trade is really starting to gain momentum, that's where you might see where that the yuan is going to break out to the upside. So, and this is a key thing. Now, if the BRICS trade is, let's say, not necessarily not going to work, but is not ready to really solidify itself globally and gain the momentum that it seems that it really is doing right now, then you may see a little bit of resistance here right now. You also have the fact that the Chinese economy, we know their books are always cooked, but the Chinese economy is not doing as well as had been projected for this time this year, So, and I think that's something that's holding back their currency. The volatility in the yuan, I think, is something that you can expect to see hold for a while. I mean, if you look at the yuan right now, just over the past 6 months, it's had very strong volatility, and it's also trending very strong. Whether it was going to the downside and reverse, and now it's in the strong bull trend. So there is opportunities there. I would look at the relationship with BRICS as far as how much support you'll get there. If that continues to grow in momentum and the trade deals continue, just like you said with Argentina using the yuan, then yes, you're going to see more strength in the yuan's value versus relative other currencies, especially versus the dollar, without a doubt.
Right. No, and it'll be interesting to see how that BRICS kind of agreement plays out, right? I mean, your two major players, I will say China and India, Russia's in that as well, but, they have some territorial disputes, and it seems, they'll get onto some kind of path of working together, but then it kind of all comes back quite immediately. So, anyways, really interesting stuff. At least for me, those were the two major currencies that I just found super fascinating recently.
Oh, those are great insights and questions that you just brought up, Jacob. Absolutely, for sure.
No, and your insights, again, were phenomenal. And folks, seriously, check this out, the Tiger Forex Report. I read it every Monday to get it out, and it is just a great newsletter. Again, you can try it out. and it's a 30-day money-back guarantee on that. Teddy, thank you so much for joining us. You look like you had a really relaxing weekend, so it's good to have you in here.
I actually caught up on some rest because I was out of town last week. I needed it.
Absolutely. So. Well, Teddy, thank you so much, all right?
Thank you, Jacob.
We'll see you now. Folks, that was Teddy Keckshat. Again, get over here, Tiger Forex Report. We will be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den. Available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Let's take a look at this quickly before the end of this program. We were talking about that credit shoring up a little bit earlier in the program. Banks also look set to continue tightening lending standards in the second half of the year. Turns out I can't read this early in the morning. That will make it more difficult and costly for small and mid-sized businesses and U.S. households to secure funding. Corporate bankruptcies are on the rise, and so are consumer debt delinquencies. Delinquencies rose across all days past due, quote unquote, categories on a year-over-year basis, jumping from 0.16% of loans in May 2022 to 0.25% in May 2023. Yeah, wow. So I think we'll see this come on long term. Big tech, obviously, last year was rough for tech companies. So this goes on, obviously, as kind of loans stop going out and investments stop going out, the tech might see a crunch. But they have so much cash right now that might be extended until they see a big contraction. For my little science section of the day, this is from the University of Cambridge, and this is older adults who remain more active have a better quality of life. That is simple Newtonian physics there. An object at rest stays in rest, and one in motion stays in motion as well. A reduction in the amount of time spent physically active when adults are over 60 years old is linked to a lower quality of life. It almost seems like a no-brainer, but we have to do this, I guess, in science. The same was also true for increases in the amount of sedentary time, such as watching TV or reading. Physical activity, particularly when it is moderate intensity and raises our heart rate, is known to reduce the risk of a number of diseases, including heart disease, stroke, diabetes, and cancer. The NHS recommends that adults do at least 150 minutes of moderate intensity activity or 75 of vigorous intensity activity a week. Older adults are also recommended to break up prolonged periods of being sedentary with light activity when physically possible. So folks, get out there, get moving, and your body will stay moving. Thank you so much for joining me. We have Basil up next. Steve will be having a replay. Folks, thank you so much for joining me.